First Intuition and to our business tax revision session. We're covering Finance Act 2023 in this session, and we're going to be looking specifically at task number 3, dealing with partnership profits and losses. We're also going to be calculating some national insurance. So if you haven't come across me before, my name is Anne and I'm delighted to be with you, taking you through one of my favourite subjects, business tax. And without further ado, let's have a look at our revision notes. So we start our mocks as well as our task bank questions with a little bit of information about what the task will include. So you can see here the task is about analysing profits and losses of a partnership as well as calculating of national insurance. 8 marks, so 9 minutes to do it in the exam. That's all really useful to know, I think, in advance. So as you actually get into the live assessment, you're not taken by surprise in terms of the mark allocation. We then follow that with a task briefing. I'm not going to go through that with you, but it's there for your reference. So if you do feel a little bit weaker in terms of knowledge of partnerships or national insurance, then you might find that helpful. The reference material, of course, is always useful as well. So you might want to be aware of national insurance in section number 2, and we'll no doubt be referring to that as and when we need it later in this question. So here is our example, the one that we're going to be having a look at. I'm just going to make that a little bit larger for us. So starting to take a look at the question then. Millie and Molly have been in partnership for many years. That's important. So they've actually been trading together for a long time. So there's no leavers and no joiners at this point. Making accounts up to the 31st of March each year. So the year end is March. Screen's alive here. So we've got to a year end of March. And what we know about Millie and Molly is that they have been sharing their profits in the ratio 2:1 respectively. So Millie's been getting 2 parts and Molly getting 1. And if you know that you struggle with this particular concept, just think of the partnership profit as being like a big cake, that Millie's taking 2 slices and Molly's taking 3. Now on the 1st of June 2023, so that as you can see that's part way through the year, we had a little timeline here. We're told that we're dealing with year to March 2024. So if my year starts in April of 2023 and it ends in March of 2024, and I'm told on the 1st of June 23, so just 2 months into the year, Mandy joins. So we've now got a situation where we had Millie and Molly quite happily going about their partnership business for 2 months of the year. And then from the 1st of June until March, so a further 10 months, we then have 3 partners with Millie, Molly and Mandy. Feels like a tongue twister already. So Mandy has joined the partnership and it's agreed that from the 1st of June, the partnership agreement would be as follows. So they're changing their profit sharing ratio from this 2:1 ratio that they enjoyed until Mandy joined, and they've now got a new arrangement whereby everybody's going to take some salaries and the profit will be shared 3 to 2 to 1. So our cake will be divided into 6 pieces now. Millie will get 3 out of the 6 pieces of the cake, Molly will get 2 out of 6, and Mandy, as the new joiner, will get 1 out of 6. The other thing to note is whenever you are given salaries in a manner such as this, these are the annual salaries. If you go for a job and they say, oh, your salary will be £22,000, and you get that job in, let's say, October, you don't assume that you're going to get 22,000 in October, November and December. It's 22,000 for the whole year, so it's going to be shared over 12. So these are annual salaries. Unless told otherwise, salary figures will be the annual amounts. And because these only started from June, everybody's only going to get a salary for 10 months out of this year. It goes up to March, but they only start with this arrangement in June, so we've got 10 months worth of salaries rather than 12. Now we haven't actually started answering the question yet. All we've done is understood the information presented Another really important, crucial piece of information here is the profit, because that's what I'm trying to share. That is the whole point of sharing partnership profit, that there is a profit. Imagine a bucket full of money, £360,000. The question is just about how am I going to empty that bucket into the individual buckets of Millie, Molly and Mandy. At the end of the year, I still want to have £360,000 of profit. It's just that it needs to be shared in accordance with their arrangements. And the requirement in A is to show the division of profits between the partners for the year ended March 24 in the table below. I'm just going to make a little note to myself that the profit was 360,000. So my objective is to have that much profit shared at the end. Now, up to May of 2023, that was 2 months of the year. So the first thing I would be tempted to do is to take my £360,000 there and say, well, I've actually got two things going on here. I've got the old rules and I've got the new rules. And the old rules were only in effect for 2 months before we actually had the new partner join us. So let's just check what that's going to come to. So I've actually only got £60,000 of profit under the old rules, where I had 10 months or £300,000 of profit under the new profit sharing arrangement. So I'm going to start in that period up to May, sharing out my £60,000. So I'm going to pop 60,000 in here. Then I'm just going to refer back to what I said about the cake and Millie and Molly. Initially, Millie and Molly were sharing in the ratio 2 to 1, so it was like having a cake in 3 slices, and Millie was getting 2 of those 3 slices, whereas Molly was only getting 1. Just going to put my workings in there, makes it a little bit clearer for us. So 2 slices of what? 2/3 of what? Well, 2/3 of the profit. So after the £60,000 made, if that is a cake divided into 3 slices, each slice is worth £20,000. And because Millie gets 2 of them, she's going to end up with 40,000 of profit, with Molly only getting 20,000. And of course, Mandy hasn't joined by this point, so she gets nothing. It does specifically say, if your answer is 0, enter 0. So I can't leave that last one blank. I've got to specifically say, Molly gets nothing. And that is the first part of the question. That is what we'd call the old profit sharing arrangement or profit sharing ratios. We've now got our new profit share arrangements or ratios effective from 1st of June. And from 1st of June to their year end is then 10 months. But this time, we've got this 300,000 that we need to share out. We appreciate that. But we're told that before we share out the profit, we pay salaries. So we actually have to deal with the salaries before we can deal with the profit. And the profit is whatever is left over. So the profit is the balance once we've paid the salaries out. Again, can help to imagine it as a bucket full of money. It starts with £360,000 in, and you empty 60,000 of that bucket out and split it between Millie and Molly. So the next thing you're going to do is take out the salaries. And in terms of salaries, we have Millie with 22,000. Let's just see if we've got space for workings down here. As we said, it's not for a full year, just for 10 months. I've got 22,000 for Millie, 16 and then 9 for Molly and Mandy. And everybody's salary is only for 10 months because that's the point in the year where they decided they were going to start paying salaries. So let's see. I would go with normal mathematical rounding rules in this part. Sometimes it might give me specific rounding instructions. The only instruction here was that we have to put 0 if it's 0. So I'm just going to go with normal maths rounding rules, but there's no other information. So in total, let's work out how much salary we're paying out. £39166 in total in salaries. And that, of course, is for 10 months of the year. It's only from the point where the new partner joined. So I can transfer those salaries into here. So giving each partner a salary for 10 months of the year, reference to our working below, just for your reference. And then I'm on to the profit share part. Maybe I need another working for that, because now I get to the profit share, I have to recognise that of the profit that I'd allocated to this 10-month period, it was 300,000. I haven't got that much left because I've emptied some out by way of salaries. So the profit was 300,000 for this 10-month period. Deduct the salaries. And see what's left to share. So if you do like to visualise things, you imagine you had a big bucket full of profit, literally full of money, and you gave it out to these 3 different partners. You gave them their salaries, and there was only £260,834 left. So then you were able to say, okay, that's the profit that's left. Let's now share that in your profit sharing proportions, which I believe were 3, 2 and 1. So it would be 3/6, 2/6 and then 1/6 for each of the partners respectively. I always think this is the least taxy part of the whole exam, and it has a huge overlap with what you actually do in level 3 in accounts preparation questions. The whole concept of sort of salaries and sharing of profit. The relevance of it for tax, of course, is once we've actually got these figures at the end, these become the trade profit for our individual partners in their individual tax computations. But we're not taking it to that stage. We're stopping by saying, we've shared out the profit. This is how much we want to give to each person. So once I've got those figures, I can slot them in to here. Oh, wrong box. It's my first partner, Millie. And then I can total up the amount of profit that each partner is going to get, remembering that I started with a bucket of money with £360,000 in it, so my objective at the end is I still have £360,000 left. Include the total profit there. So let's add down each column, and then we can check whether we have indeed lost or gained any profit. think I've missed something in that one. Let me just add that one up again. £20,000 from the first bit, which I almost forgot. There we go. So it's a subtotal of all the profits and the salaries over the entire year. So adding together everything in each of these columns. And when that's done, add together the three columns and check that the profit that you've allocated to your three partners does indeed add back to the 360,000 that we actually were hoping to share at the very beginning. So that's a lovely little double check for us at the end of the question there. Okay, so that is part A completed. Part B, which I quite like, the way that they do this, then is not in any way related to part A. So if you've made mistakes on part A, you've got a whole new shot at the question when you move on to part B. Completely different people, different business. So you can put part A behind you if you feel like it's gone a little bit wrong and start afresh with B. But here are the profits of two self-employed dog walkers, Basil and Bo. Calculate the Class 4 National Insurance contributions for both Basil and Bo for 23-24, answers to the nearest penny. If our answer is 0, then we enter a 0. So in order to be able to do this part of the question, I'm going to suggest that we're going to need our reference material. So we might want to get that out and have that with us in the exam. Of course, it's available to you through pop-up windows. So my reference material is just here. Let's just get back to it. Are. And I'm being asked here for the Class 4 National Insurance for each of these dog walkers. So the bit of the table that I'm actually interested in is this part. Class 4 National Insurance on profits between 12,570 and 5270 is 9%. And then Class 4 on profits above 5270 is at 2%. So it doesn't specifically say so, but what does that actually infer? It's that profits below 12,570 don't have any national insurance at all. So we have like a national insurance free bit, and it does actually mention there, doesn't it, the lower profits threshold. So it doesn't say up to 12,570 is at 0%, but it references a lower profits threshold, which means that that much is actually free of national insurance. So it's only profits in excess of 12,570 that will have national insurance on them. So now I've got those two figures available to me. Let's get on with the question. So here are the profits for Basil and for Bo. Let's do Basil first, 27,776. Just inserted a little bit of extra paper here. So we were told profits between, profits that are in excess of 12,570 before we hit that upper limit are going to all be at 9%. So I'm going to compare Basil's profit with the national insurance free bit. To find out how much of Basil's profit is actually going to be subject to national insurance. It's 9% in that first band, and it did say, I think here, to have an answer to the nearest penny. So that means 2 decimal places, pounds and pence. So that's my answer for Basil. Bo? Well, Bo had a profit of, let's just actually check, thought I knew it, 65,074. So Bo's profit is 65,074. And the reference material told me that profits between the 12,570 and 50,270 are going to be at 9%. So let's work out how much is in that banding. So 3393, no decimal places there, just a round number in terms of national insurance. But that's not quite it, because that only taxes the bit up to 50,270, whereas Bo's profit is actually 65,074. So I have to keep going. I have to tax the bit now between 65,074 and the 50,270, the limit of the band below it. So I've got 14,804, which is now going to have national insurance attracted at a rate of 2%. So the national insurance questions I think are actually quite nice. Doesn't actually want a total from us, does it? But if it did, then there it is. I think these are quite nice questions because the reference materials gives you all the figures. So as long as you've looked up that on the reference material and you understand what you're doing, you understand that there are these limits. We have to basically just check the salary, or check the profit rather. We see it diagrammatically. No national insurance up to 12,570. Between 12,570 and 5270, we're paying 9%, and that's exactly where Basel fell. So Basel was all either nothing or just 9%. And then when we got to Bo was somewhere up here, which meant that there was no national insurance on their first 12,570. They then had national insurance on the middle bit here, and then 2% thereafter. So that might help if you struggle with the national insurance questions. So all that leaves us to do is to actually jot those answers into our answer boxes. It does say if your answer is 0 to write 0, so I must be careful to do that. There was nothing at 2% for Basel, so I have to put 0. And that completes my task then with partnerships and national insurance. So if that is a task that you did find a little bit tricky, do be sure to go back to your tuition materials or listen to the recording again and just keep practicing.